Good evening, traders. Good evening. Welcome. It is Sunday, the 8th of May. And obviously, I'm producing this for the week commencing Monday, the 9th of May, 2022. And I'm not going to do a fundamental preamble that I usually do, mainly because I think I only really have to do it like once a month. There's just not enough changing at this point in time. It doesn't really justify me doing it. The war in Ukraine is still ongoing. Russia is definitely on the losing side. The likelihood of nukes is still relatively low. Inflation is still kind of where it is. It's now, rate hikes is pretty much the thing that's happening at the moment. But I would say that with rate hikes, I think we could be seeing something amazing happening in the currency markets. And I want to take a moment just to kind of talk about this. I'm going to use Euro Yen as an example. So let me just go through to the major watch list and have a look at Euro Yen. I'm using PROREALTIME as a platform, by the way, in case you are curious about that. So if I load this up, now I was learning how to trade in 2008, 2009, 2010. That was kind of when I was getting into the game. And I really just want to talk about very, very quickly, let's just bring in 15,000 here. It's got to be enough. Okay, there we go. So coming back to this, we used to have some really nice long sustained trends. Okay, so going back to this period here. And this was back then when there was a fear of Greek defaulting and trade wars with China. So a lot of big fears during that period. And there were some really big sustained moves. And it was really after that, around about 2014, where those trends started to go into a range, and this is identifiable across the 47 pairs. I mean, it's ridiculous, but there it is, and it's been largely range bound, almost certainly from 2016 until now. But prior to that, probably 2014, where it starts, because you don't really notice for about 2 or 3 years. You don't notice that things have changed. It takes you a couple of years to know for sure that things have changed. And I would highlight that we've been largely range bound. And so, what's been interesting about the last month or two is we've seen some, and obviously due to there's essentially what's happening is we're kind of approaching a bit of a tipping point planet-wise with regards to democracy versus autocracy, which is where we were, in 1914, 1918, and again in 1939 to 1945, and this is kind of where we are again. So obviously there's just, there's a portion of our population that seems to be very much in love with the idea of being ruled by autocrats and oligarchs and, kind of the wealthy controlling everything, and whereas democracy, the whole idea is meant to be a sense of balance. And democracy, the thing is, it takes a communal agreement. We're all going to behave, aware of each other, as opposed to any other kind of form of government where the rich and powerful are very much in control. Don't get me wrong, I want everyone to be rich and powerful. I don't have an issue with money per se. I have a problem with Nazis. And so that's the end result of an oligarch. That's where you end up. That's where you end up going, well, we need to eliminate these people from our population, and we need to eliminate them from the right to vote, and we need to restrict control because we need to control the power. And the end result is always Nazis. So that's really what I'm against. And there's no way of avoiding it. Once you start to let the all wealthy people control the voting and control the propaganda and the voice and the communications and the media, there is only one outcome to that, because eventually, power corrupts, absolute power corrupts, absolutely. It's just unfortunately the cycle. So the reason I'm talking about this, actually, is just to say that we've started to see a shift with a bit of fear, a bit of panic. We've started to see a bit of safe haven behavior. We're starting to see a bit of move, dollar yen, certainly, or at least to the Japanese yen. We're starting to see a bit of move towards a stronger dollar. Okay, and we haven't seen those in a long time. Some of these charts have moved in 20 years. We're starting to see some really big things, and I'm optimistic about it. We're seeing rate hikes as well. Sorry, and I apologize. I digressed. One of the factors is inflation. Okay, so we're starting to see rate hikes, and there was a time when we used to have a carry trade, which basically was money moving on a much longer period of time, with the bigger institutions moving money between higher interest rates in certain countries to lower interest rates in other countries, and we haven't had that for a while. And we might potentially start to see some of that. So the good news being, where I'm going with this is it's actually a good thing. We might start to see inflation. It's obviously not ideal, but we might start to see some actual longer-term sustainable trends starting to show up in currency pairs again, which means end-of-day trading, swing trading will come back into fashion. And that's amazing if that's the case. It's early days. So I'll know, again, I was talking about the dollar starting to strengthen when I was looking at the dollar index. I was talking about it potentially turning at the bottom here, and this is where where we are now. So we only will really know in 2 or 3 months, or even 5 or 6 months, we'll look back, we'll like, okay, good, we've got some good sustained trends. And definitely a year or two from now, we'll be able to look back and go, look, a lot of currency pairs have moved. I used euro yen because I wanted to talk about how euro yen used to have these amazing trends, and then it sort of became the sort of sideways thing, certainly with the intervention. And if you look at dollar yen, certainly here you can see very much range bound for a very long period of time. But prior to that, we used to have these long sustained trends, kind of at least more or less moving in one direction way more than another. So that is meant to be the good news. I'll stop with that little preamble and move on to everything and have a look at this, see if I can pick everything back up and start to go back to where we were. Okay, so let's have a look. Let's start off with, let's go back to the week ahead. I apologize. I didn't mean to completely ramble, but this is a serious thing, and I was hoping during my lifetime at least we'd have some peace and quiet, but it looks like it's not necessarily going to be the case. Okay, so let's have a look. The volatility index is climbing. This is no surprise. We spoke about this. The trend is very much to the upside. We are seeing high lows and high highs in the weekly charts, and with everything else we see in the world, we're starting to get a sense of that. What's interesting about it is that it started to rise before Russia invaded Ukraine. So certainly it started to rise, potentially even just on fears of potential inflationary rises. We've got that bullish divergence at the bottom there. We're starting to get that. So my expectation is we will stay in the upper ranges and potentially continue to rise, but we'll bob up and down as we go. I do feel like that we are settling into that route. In other words, we're now aware of inflation. We've started to hike rates. We've already got one war happening. We're already kind of, some of the really scary things already happening, and so the question is, will it get worse or not, or will they stay on track? And the markets will calm down once they start to get a sense of it. Okay, is it settling down? So here's the thing. When we look at the dollar index here, it's gone largely parabolic. It's done a really big move here compared to prior years where we had a strong rejection in the past. Yes, we could still have that happen, but it is different. The difference now is the price is closing significantly higher. We can see the weekly is also overextended. We've got the daily here starting to, it's still relatively flat on the MACD, but I would say in principle, I'm not surprised that we're starting to see some divergence. We are due, if for nothing else, we're due for a weekly retracement, I would say. We can continue for years to go to the upside. We haven't technically, I don't think we've broken out of this range. Okay, so we have a long way to go before we do that. We are definitely overdue for a correction, and if we do, it is not unrealistic that if we do have a monthly correction, we could come back to 100 or even further back into the middle of this range. That's feasible, it's possible. In fact, it's not even completely outside of the realm. We could stay within this range and come all the way back down to the bottom. However, let's lean towards the most likely probability that we're going to have a correction, and then we're going to resume. So that's one of the things I'm watching for. It'll start to show up over the daily. It'll take a couple of weeks to confirm it, and I'm looking for it in the 4 hourly, but that is something I'm looking for. If I look ahead at euro dollar, we are consolidating. We don't seem to have the power to be able to retrace back up to 1.08 or back into this previous level of support. We are overextended to the downside, but that MACD is looking nice and bearish, and there's a continuation there. Let's just minimize this as well so we can see what's happening there. It is at the bottom of a historic range, and therefore it could potentially turn here. Any of these kind of things could happen, and also we could be here for a while. We could be here for 3 or 4 months before we potentially turn around. So I'm just going to hunker down and just be prepared for this kind of thing to happen. I'm leaning towards a stronger dollar. So basically what I'm saying here is that if we do get a correction, I see it as a temporary weaker dollar, just having, a bit of a correction as we normally do before we do a continuation. For now, there is no reason that I see that we would expect that the US dollar could potentially weaken anytime soon, not with the inflation going on. High interest rates generally imply a stronger currency, plus add that to the general fear going on, and then you've got safe haven behavior multiplying that. So I'm oversimplifying it, but that tends to be the case. So if we look at GBP, we were kind of trying to retrace. We couldn't break through that monthly or weekly level. We've moved down. And it looks as though we're pretty much kind of set to continue. We're just hovering around these major levels. So what I'm going to be doing this coming week is essentially observing price behavior on the 4 hour for the most part. Just watching, looking for divergence starting to creep in, looking for trend changes breaking to the upside. But otherwise, I'm still trading with trends. So in other words, I'm basically, my plan A is always going to be stronger dollar, weaker currency, unless for whatever reason, one of these other majors is definitely strengthening and is stronger than the dollar for whatever reason. I'm looking towards that. And so trading with the trend for now. And so what I want to say formally now is that we're in a slightly different game than we have been in the last 4 years. So please be prepared. The range might, it's not broken until it's broken. but we are in a potentially different game now. Okay, this is not the language being used. The behavior of the markets is not the same as I've seen since 2016. There is something slightly different, and therefore I would be prepared for things to, for me personally, I'm going to be aiming just more for trend continuation for now until I see a definite reversal across the board. Okay, so Aussie dollar here struggling. It is trying to turn around. The same with Kiwi dollar, trying to get back up, getting pushed back down. It's almost as though the brakes are coming on now. The market over the next couple of weeks is going to start to move up, move down, slightly lower lows, starting to bullish divergence come in, and then potentially starting to see a reversal on that. So this could be something that happens over the next couple of weeks. Dollar yen. So dollar yen is coming up against a major weekly monthly level here at 131. It's way overextended in terms for a currency at any rate, way overextended on that weekly. And it would just be really good for it to do a bit of a correction here, and they can always carry on over time. I would say though that these things have been known to look. We've had some really, I should highlight this, when we had in the past, we've actually had the dollar do some really big and unbelievably big moves in the past, and we're still even been stuck within this range over the last few years. So we can have, it is a possibility we could really see this get knocked down to parity, but we'd have to be in very, very unusual circumstances for that to be the case. So I'm not sure if that is the case just yet. Unfortunately, you only know it's like you're with a torch in the dark. You can only see a little bit ahead, like a week or two or a month ahead, and you get clues as to whether the bigger picture is the reason the markets are doing what they're doing, or if we're just kind of going to revert back to normal day-to-day behavior any year in, year out. Again, okay, so moving on to these ones. Dollar Swissy really is moving to the upside here. So we do have a weaker Swissy. It's moving, at least as far as I know, in the direction the SMB tends to prefer, but they are kind of fussy about that. But high maintenance, we are approaching a major level here. Parity with the dollar. For me, it makes sense that I'd be looking for the market to keep going this coming week and looking for trades to the upside there, and then maybe getting some strong rejections off that. Okay, same here with dollar CAD. We're starting to head up to major levels, and therefore we are approaching a period at price levels, a lot of these price levels, where there could be some strong rejections off those. Okay, you can see here as well, the dollar ruble actually moved down to the lows and has also been rejected off that, which implies potentially a bit of a range-bound behavior between in these areas here. There's no real expectation at this time that Russia is going to be able to turn around without resorting to some sort of nuclear arsenal, which is going to be destructive for every single person on the planet. There's a no-win scenario, and so I can't really see that. Ukraine are absolutely turning things around. They're very much in control of things. I would say more in control at the moment, even though unfortunately the bloodshed is just ridiculous, and there's no doubt Putin is just destroying civilians, which he shouldn't be doing. So these are war crimes, and so this is something that I certainly hope he is brought to justice for. So here we go. We've got the strong bullish reaction here, not closing as high as I would have liked it to on Euro Aussie. I would have liked to see it break the high, but head up. I think what's most likely to happen this week, we're starting to push a little bit high, is to see Euro Aussie head up to 1.5250. So I quite like the look of that. These are just sort of a couple of the charts I've been having a look at. I'm still expecting pound yen to break below these lows and do a bit of a head and shoulder move down towards 156. So I quite like the look of that. Pound CAD as well, just some really nice moves to the downside, but now starting to show some bullish divergence. So it's not happy going down anymore. It wants to start either consolidating or change its trend to the upside. So therefore, I'd be more bullish on this, or step out of it, stay away from it completely. Pound Aussie as well, definitely a nice double bottom there. Strong bullish divergence, and you can see it's starting to push to the upside. Price actually shifting its sentiment here to the upside, testing 74.50 and likely to push up. We might end up with a strong bullish candle here, and then we have the sort of a tweezer bullish rejection of the bottom here, then we're likely to go up to the top of the range. So I'm certainly bullish on Pound Aussie for now. Pound Kiwi, very messy on the daily, very dangerous here, and actually not that ideal for trading, so stay away from that. Aussie Swissy, these are sort of pushing up to the highs, but there's some exhaustion there, so it's not impossible that they could get knocked back from that, but it is testing that 0,770 level, so you might want to push a little bit higher. Not really liking the look of that. Here we go, Aussie yen. So quite a few of the yen pairs, I'm looking to see them break, perform a bit of a head and shoulders, have a bit of a weekly / monthly retracement correction. There could be some great day trades, possibly even some swing trades to the downside in that very short period of time. Kiwi CAD is still heading down to the lows, but definitely now starting to show it's putting the brakes on here. You can see that price action starting to stall, trying to go a little bit higher, and some bullish divergence. So it's going to hover around here, potentially push a little bit low, but it's in this near future I'm expecting to push a little bit higher. Okay, moving on to commodities. Commodities here are forming a very nice, strong, I would say significant. I'm going to put it on the weekly chart. It is forming a nice bullish breakout pattern. So at this point in time, my expectation is we're going to see a breakout in the near future of commodities commodities to the upside and see them head up to these old highs on that knee-jerk reaction when the war came out. Now, I mean, there are real problems here. We've got a lot of commodities that are coming out of Ukraine. I mean, Ukraine is the crown and the jewel there in terms of all the different things that they produce, and we rely on that. I think Russia is going to be, I'm seeing some interesting talk of them being eliminated as a supplier of oil within, the next couple of years. That's interesting to me. Again, it's whether it happens or not, whether it's all talk, but it is interesting. So there's no doubt there is pressure on commodities, which might be the case for the foreseeable future, and then it might calm down in a couple of years. So the best case scenario here is that Putin stops this war, or he's brought to justice, and we see normal democratic business and trade pick up between Russia and then Ukraine can recover, and then we see everything start to calm down a little bit, or at least we can separate what is the inflation coming from in terms of earnings that we're seeing separate from commodities, a pressure on commodities, as well as war and fear. Okay, so let's have a look at gold. Okay, so gold has had this rejection. It's dripping back down into 1834, into these old highs. I'd like it to test that for support. It is technically a downtrend on the weekly, but this area is a relatively good area for it to stabilize. And therefore, a strong weekly candle could be a good indication of an attempt for price to push a little bit higher. Also, a daily uptrend. Again, moves back up above 1900. I'll be looking for moves to 1950, but we're not there yet. It can still head a little bit low. Gold, if anything, in the last couple of years has shown that it is just kind of doing its own thing, and it can't necessarily be relied upon to behave simply and most straightforwardly when all kinds of other things are going on, fundamentally at least. And actually, there's often other reasons. There might be reasons whereby gold is being sold by bigger institutions to cover kind of losses in other areas. We don't always necessarily have all the data up front. And so anyway, just highlighting this as well, silver coming back down towards these lows, potentially coming down towards the low 21 level. We'll see how that goes. Copper also definitely pushing down towards these lows. These are looking more bearish than bullish. I need to see a nice strong bullish monthly candle to believe that there's going to be a bit of a turn there. However, natural gas, you can see here taking off. It's on fire. Lots of exhaustion over here, and certainly you can see it's starting to flatten out a bit. So natural gas, on the other hand, potentially is starting to build up towards bearish divergence for a bigger correction that will happen, likely on the monthly period. So we'll see how that goes. Okay, crude oils, nice and bullish. These are big constituents when it comes to the commodity S&P CI commodity index, and therefore it's likely they are the ones that are likely to push. So we're going to see a breakout. So at this point in time, the monthly looks okay to me. I think it's going to keep creeping higher. The weekly looks like it's building up to a breakout. So for now, my expectation is we're going to see these continue to push up back up towards these old highs, certainly towards 120. And 130 that's on US crude, on Brent crude. These are looking nice and good. So for trades this coming week, I like the look of these. Thank you very much. I like these for nice breakout trades and continuation to the upside there. Let's have a look at sugar. Sugar is just waffling where it is. You can see it had a strong reaction at the highs. In fact, slightly bearish on that, slightly lower high on the indicator. It's a lower high in price action. It's fine. So we'll see if this is going to be able to take another run at that, and if it's building up to a breakout to go a little bit higher. There's no reason why that couldn't be the case. Coffee. Finally, you can see all that exhaustion we've been talking about a couple of months ago is starting to play out. We can see this starting to correct. This is a good thing. I want to see coffee heading down towards 200, at least initially, and then we'll see where it's going to go from there. So coffee expecting this week for that to head lower. Actually, go back to coffee. I want to have a look at it on a daily. Could be a bounce off this level. I could see the 4 early here, but this is looking way more bearish. Look at the rejections we have on the weekly before that we don't have now. Look at the daily. We're starting to close down near the lows. That bearish momentum on the MACD just trending lower. And we can see on the 4 hour, it's starting to close right near the lows of that. So this is definitely not a sign of strength, a sign of weakness. We'll see if the buyers decide to step in for some reason. Wheat. This is where another one that is, and this all makes sense. So we've got oil, we've got wheat, and a few other factors, and these are all tied to both Ukraine and Russia. We could see that the pressure is starting to build up here. This is leading to a bullish breakout, folks. I'll put it on the weekly as well. I think we're likely to see a breakout here and see it going up to the old highs. So just be prepared. And of course, what does that impact? Impacts the price of bread. So we can expect that reasonably these are going to be the cases. Look here actually on cotton. See the exhaustion building up here. The wicks are getting bigger and bigger. Here's a strong bearish rejection candle. This is going to top out at the moment. It's definitely overextended on the monthly, producing a rejection on the monthly as well. Whether this tries to tread water, similar to what was a coffee, and then have a bit of a breakdown, that's a possibility here, but I'm not as bullish on this as I was. I can see here we don't have bearish divergence, so this is a very important point to make here. We don't have bearish divergence, meaning this daily is not done yet. It's going to keep trying to go higher, but I can see that it is starting to struggle at this area, not even the 160, closer to the 150 area. I'm just going to mark that in. Should I do it on the monthly? Let's do it on the monthly, and let's just mark in that 150 area. That's going to be its battle. Let's see if we can get through that. I'm expecting this to keep trying, but also to fail. It's going to make it super, super choppy. Okay, the global indices. Let's have a look at these guys. So, ladies and gents, we are not strong at this point in time. Okay, so look at this 4 hour. You can see that nice little double bottom trying to stay above those levels. But it's one of those things where it's almost like it's being pushed back. Okay, it's kind of, if I had to match it to what you're seeing today, it feels it's like the Russians trying to hold their ground and they're being steadily pushed back by the Ukrainians. They're being pushed back into Russia. So this is the thing. A solid candle on the weekly that closes near the lows for me is going to be a massive red flag that's going to indicate breaks to the downside. At this point in time, you can see the MACD is now pushing into bearish territory in terms of its value. And also so is the daily. So I'm just kind of highlighting here that we're not certainly not looking that strong. I need to see, and I always say this, it's always going to be the case. I can see these levels here on the daily and just put up alerts. This makes it very tricky to trade them because they bounce off these levels. But I'm prepared for this week to see things drop a little bit lower, and when they drop, I'll be looking for trades, very brief, kind of quite aggressive trades to the downside, not scalping, but looking, obviously managing my risk, because just as easily price can bounce. And you can see actually at 34,000, there's a strong daily level of resistance. I'm just going to mark that in there. On that one. So looking for price to get above that to become more bullish, and below that. Now I was talking recently about us being range bound on the month. We're also range bound on the daily. So it's hugely volatile. So newer traders are going to get just beaten. You're just going to get rinsed. So it's super, super dangerous. Again, we've got a similar bottom here on the S&P. I need to see us close back up above 4.3. It's really struggling. So where it was able to do it, you can see we closed in April, right below the lows, and here we're struggling. It's essentially considering whether it should continue to go down. This blue box is still an area where, to me, in my mind, we're capable of turning around. So any strong bullish green candles that finish in the monthly here are potential reversal signals to the upside, nice bullish signals. So again, watching this week, expecting it. You can see it's battling to get higher. It's pushing a little bit low. The charts that really should be watched are the weekly charts. Okay, so let's have a look at them. What's really shifting here is that for a long period of time, we've been above, let's call it the 50. We've been above that 50 moving average, well above it, even well above the 20. Now what's different is we've come back. We started to produce lower highs. We're starting to produce lower lows. We're shifting below that 50 moving average. And that's significant. That means that very slowly but surely we are below the 50 moving average. Last time we were really significantly below that was when COVID broke out. So it's a serious period. We're in a serious period of time. We need to be taking this seriously. We need to be prepared. I'm prepared psychologically for the market to head lower, back down towards these old highs. That is not necessarily a bad thing. So put that into perspective. From a monthly perspective, that would be a 382 or a 50% retracement, not even a 618 necessarily. Potentially maybe if it came down to these old highs. So it's still a very healthy correction. We had almost 2 years of straight upwards growth. Phenomenal job numbers coming out of the US. Phenomenal growth coming out of there. In fact, never seen before, and I think it's very unlikely they will ever do now, kind of bail the rich out now and expect that 1% to drip down to the rest of the 99%. It's just been proven it just absolutely doesn't happen. But it also at the same time doesn't seem to push a lot of inflation. So anyway, there's a lot of interesting stuff to talk about there, and actually there are better speakers on YouTube than myself to discuss that, to do that, and I'll probably mention them in my next week video as well, so that you can kind of tap into these most phenomenal speakers. So anyway, having a look at these, I'm just prepared for it. It can still turn in this area, and so I'm treating the moving averages as an organic trend line, and potentially layering that up with Fibonacci levels. If you want to go into Elliott wave theory, you can do that as well. Let's move on to the Nasdaq. You can see the Nasdaq actually being the weakest right now. Tech stocks are really taking a beating, and part of that is probably simply that they were just overvalued. All right. To me, I see that more as an overvalue. Why? Well, because people are still buying Tesla cars. People are still moving across to electric stuff. The shift across to it, the appreciation and the psychological, the market sentiment, enthusiasm for electric goods, for example, and technology is increasing. It's not decreasing. With the exception of, say, something like Facebook, for example, and maybe Netflix. People are starting to kind of declutter their lives. A bit of a Marie Kondo thing happening there. And so I can see why that's happening, all right? So this is a possibility that actually makes fundamental sense to me as well as technical sense to me, expecting these to come back down. It also explains why it's leading the charge. So that, to me, it makes sense that when tech stocks do the turnaround, that's probably when they've started to reach fair value. And that honestly could be anywhere in these kind of major areas. I'm looking at major price levels, and I'm looking for strong bullish rejections of the lows, but I'm also prepared for them to creep lower. Okay, so we got the Russell here. The Russell is starting to break through to these lows. The Russell seems very happy to head down to these old highs. So if we take our cue from the Russell here, it seems reasonable that we're going to expect the markets to continue lower this week as the Russells are now eyeing 1700. Let's move across away from the US, go across to the UK. You can see we're battling at those old highs. But now, listen, I have to say something is, away from the US, there's been extreme growth in the US. And so therefore, correction, if there was overvalue, there's a bit of a kind of coming back to more sort of more normal values, potentially. I don't mean politically or socially. I mean, price-wise, we're coming back into that sort of true value area. But it's interesting because we've had slightly less growth across the UK and Europe, and we're having less of a contraction. We will still be impacted by the US, no doubt, but it is nice to see these. It's essentially trying to hold these levels. But if there's a heavy pressure from the US, we could potentially see these breaks to the lows. To me, I'm finding this much higher risk to trade. You can see here as well the DAX behaving beautifully technically. Look at these moves down, solid rejection of this, and a continuation back down to these lows. At this point in time, back down even potentially even up here towards 13,300, and those are my expectations as well for the time being. Prepared for those to head lower. Same thing here, beautiful, beautiful pullback into a level of support, tested as resistance, and head lower. These are behaving, technically are behaving as they should, and so the signals are very clear here. It's very nice, but they're signaling intent to head lower. And this is interesting because we had the US heading lower first. Now we seem to have Europe starting to follow by, which could simply, the scary part about that is that could simply imply that we are at the beginning, ladies and gents. This could be the next year. And I don't, this is, an entire sort of global kind of depression on stocks, while lots of other things in the world are going well. A lot of that could be sourced to a war in Ukraine, which is, by the way, is causing food shortages. So global food shortages just from that symbol war. But it also means that there's probably something to be said for not doing business with really bad people. We should probably stay away from that. And so I think it's a bit of a wake up, but it's okay because we're growing planets and we make these kind of mistakes as we grow. Okay, so let's have a look at the Nikkei as well. Nikkei is stabilized, which is good. It's been relatively bearish, looking a little bit more optimistic. That simply means it could be back down towards its true value. It's looking relatively good, staying above these levels and finishing off with the Australian ASX. I'm sorry if I'm taking slightly longer today, but I'm excited and I haven't done this for a couple of weeks, so I'm obviously a bit chatty about this. Okay, again, closing right near those lows, monthly and weekly levels. I'm looking to see if this can hold, but otherwise I would expect it to drop down and actually back down towards 7,000. I think it's acceptable to put a 7,000 level in there. Let's just do that, and I'll just edit that in and just put that in at 7,000. Nice round number. And there we go. So this is what I'm looking for. Can they hold, or if they break through down to these next few levels there? All right, let's move on to the equities of interest. I'm sorry, it's a slightly longer episode today. Look at this. This is building up to a nice bearish breakout pattern. I'm going to put it in on the weekly. That is setting up to head lower. So we're at this point, I think it's safe to say we're going to see this come down and tap 300. Let's have a look at Amex. I'll try to go through these relatively quickly. Amex is coming back down to 156.40. So that's going to stay, or yeah, that's its next level there. So we can see those heading lower. Apple is holding on those lows, lower highs here. It's actually doing okay. We could be range bound for a while. It's got a chance at staying above this level. But it's either there or it's going to break lower, but I'm at this point not really expecting it to move high. Arc Innovation, Miss Kathy. Okay, we're now have solidly broken the 50 level. I think it's fair to say we're now going to move into this next range down at the bottom here, so therefore we could head lower. There's no way they're going to survive if the rest of the tech stocks go down, and a lot of this is not necessarily I can't put the blame of this necessarily at one person's foot, at one person's feet, so I can't really do it. Okay, AT&T are rebounding. I think they're going to battle at this level. I can't really see them managing to get through it, but let's see a solid close for them above that would put them back at the range and heading a little bit higher. But strangely, that's a little bit odd if everybody else is suffering and they're doing okay. We'll have to see how that goes. Berkshire Hathaway, I think it's fair to say we can expect this to come down towards the 300 level, 293, back into this and looking for it to test bullishly. That is definitely an overshoot of the previous highs. It's now free to head a little bit lower. Let's go through BP. BP, but of course we know the oil companies are doing incredibly well here, so I think it's fair to say they're going to do very well. I would expect this to break through. Okay, if we're going to see that that consolidation breakout, we can expect Exxon and these two. Look at that, they're going to keep going. So this has got its eye on 100, so Exxon is going to keep going a little bit higher here. Coca-Cola still doing well, but remember that no one can survive if everybody globally is starting to have there's going to be a bit of pressure. The only things that will do well are things that are limited resources. So Coca-Cola is doing fine. I think they'll continue to work work their way up. This weekly candle is not really a strong rebound. It did just touch the old highs. It could technically go back up from here, but it's possible. And in fact, of all the rest, I would expect it to have slightly less pressure. I should add Hershey's to this list as well. Hershey's is a good indicator of a few things here. So we've had that big push down. On General Motors, we're back down now well into this range, and therefore fresh lows here down towards 32 are very much a possibility. Let's just have a look at that again. General Motors starting to show bullish divergence here. It's really trying to turn around. I need to see a break above these levels again to see that shift around. Morgan Chase, again, well broken through here. It's free to move down to 110, 106. Let's see how it does. Meta platforms. Okay, Meta is struggling. There's not a lot of buyers above this level. It's trying this strong bullish divergence. No doubt it is desperately trying to turn around. Just doesn't seem as though there's a lot of interest above 250. And I can't necessarily see that being the case. There's nothing about what they're doing that I think everyone is very much in love with them. And they certainly don't have that brand loyalty that people, the customers have for certain other brands. Tesla as an example. I'm not saying that everybody loves Tesla. I'm just saying that they have a lot of fans. Nobody really exists like that for Meta per se. So, yeah, I would expect that to fall low. I can't see that holding. We'll see. Morgan Stanley, again, is trying to hold here, but it's also building up here to a bearish breakout. So let's put that in. Let's mark that little flat level there. So 80, let's call it 80 is going to be your kryptonite. If you can stay above that, I'll be impressed. I think we can expect, as Fed said, it's going to. You've also got a bit of a flattening out here on the MACD. Yeah, I think let's see if we can hold above that. I'd need to see you break up above 93.23 to change my mood on that. And though when I say they break above those levels, then that for me means a proper shift in that, as in that then I start to think longer term they're going to start to head a little bit high, and you can call the bottom of this as opposed to keep buying the dips. So again, I think we're free here. This is a bit of a level of consolidation here. This was a previous move to a push up. So you could argue that 177, where price is hovering right now, is a level. And it is due potentially for a bit of a correction, but at the same time, there's not a lot holding it in place down to 126. But where it is right now is a potential soft level. NVIDIA trying desperately to turn around, really is desperately trying to do that. It's not a bad area for it to do, but it's got to get back up above that 200 level. And I'm worried about that with this range at the bottom here at 184. If it breaks below that, it's going to head a little bit lower. We've got PayPal just dropping low and low. A lot of these, ladies and gents, is coming from just the tide is going out. So what is that expression from Warren Buffett? You can see who's not wearing anything when the tide goes out, something like that. Spider as well, I expect these to head lower. There's not a lot here that I would expect to turn around. Spotify, just really down to these. I mean, Spotify, sadly, there's not much history below this, but I would expect them to start to head down towards the next round numbers. So 95, 90, 85, so on and so forth. And Tesla, let's have a look. Tesla's not necessarily going to come out of this. If everybody else takes a hit, Tesla's going to take their hits as well. Really, it's desperately trying to stay above this this level here, these previous highs. At sort of 865, I think it's very fair to say we could see this drop down towards 800 or 700 if everybody else takes a hit. Vanguard as well is slipping, unfortunately, really pushing down at these lows, and it's trying to hold off that level. So 375, call it 375, is a big level, and we're going to have to see if you can stay above 375. I'm not expecting too much on that. Otherwise, the next level down for me is going to push it around about 350. We'll see how that goes. This could be a frightening week in some cases, just because some people are expecting a turnaround. Look at how this is putting on the brakes. It's a very steep, big move here, starting to slow down, bullish divergence creeping in on that MACD. It's desperately trying to turn around. It really is. A lot of these are tired of heading down. They're very overextended to the downside. Now we're coming into a level of support and resistance. 117, and the next one down is 114. But at this point, it could still drip down. But it's definitely now starting to put on the brakes, and therefore moves to the upside makes sense. But that before it officially turns around could still take a while. So I don't want to expect it this week if it could still take a while. Euro bubble. Same thing, man. You can see clear bullish divergence on that MACD heading higher. It's coming down to these old highs down here. Next level is going to put it in at about 123. It might head down to 125. They are weak, so they're not finding any love. Eurobunds is going to be the same. Again, this bullish divergence. We're getting fresh lows on price. We're getting higher lows on the MACD. They are trying to put on the lows, and so what they're hinting at potentially is that in the near future, which is the next week or two or three, they're going to start to slow down. There'll be more bullish signs, which makes them potentially a sign that they're going to turn around. Bitcoin as well. Bitcoin is holding in this level. As much as I've got Bitcoin as well. As much as I'm holding these things, it's not going to hold. it's going to go down. So 30,000 is, if the rest of the markets take a hit, 30,000 is Bitcoin's next visit. Let's have a look at that. Because, especially if all of them take a bigger drop, I guess what I'm saying is if the market starts to drop from here, we could see an increase in fear, and therefore we could see a substantial acceleration, and then we start to see bigger drops to the downside. So therefore 30,000 is fair. Ethereum, that means that even 2,000 is on the table. Okay, it's got higher lows in here. I want you to finish higher. Bullish monthly candle is a really good sign. We had one in February, we followed through in March, and then we kind of come back again. A second one is a strong sign. It's not a sign of weakness. It's a good thing. But otherwise, if we don't get those, we're just going to see them drop down. Here we go. Look at this. It's desperately trying to hold on this level. If we through this, we hit down towards 0.5. So a lot of these are sitting on a cliff edge. Back down here as well with Binance, we're going to start to head down towards 322 and so on. So if people are spare on cash and everything else is good and financially safe, if I was loaded in that sense right now and financially not committed to anything else, I think buying would be a fantastic time. And it's not because I think we're near the bottom. I'll know when we're near the bottom because we'll see a confirmation of a shift in trend on the weekly charts, which we don't have right now. So that's it, ladies and gents. I'm going to wrap this up. Please be super, super cautious. Again, we are likely to have a volatile week this week. And if we see the markets drop, there's going to be a lot of doom and gloom. And it's going to be across the board. It's going to hit cryptos. It's going to hit stocks, equities, indices. We're going to see some wild swings of potential in gold. We're going to see more moves on dollar yen, stronger dollar. Right now, what we are seeing, which we haven't seen in a long time, is very much fear-based, safe haven kind of behavior. Collectively, we're seeing that. And we can source definitely some of it is tied to inflation and some of it is tied to a war. So we can kind of, all the pieces are kind of there. They sort of mostly make sense. So everybody, please be sensible, be safe, look after yourselves, and I look forward to seeing you next week. And hopefully we have a bit of light at the end of the tunnel next week.